In this video, we are going to be analysing Palantir, ticker PLTR. If you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, we can see we're breaking into the highs once again. We're at $14. Now, we covered this stock earlier in the week. We got a good trading opportunity on it. And how did we trade it? So to quickly cover that, you can see we came into our fourth deviation. We were looking short around $13.40. And again, you can go back, check this before it happened. We talked about it. And again, locking in profits into our third deviation, which again was about a $1.10 to the downside. But again, on a percentage move, that's quite a big percentage move, or about an 8% trade. So again, what we did, short the shares, buy the calls. Now we're looking for that same trading opportunity as it's starting to break out. Reason for that, and again, we'll go through it, is, and I'll show you the trade plan that I'm actually looking at, is this one here. So we have Palantir, this one here. So what you can see we're looking to do, we're looking to short 100 shares, buy a call. So what we're looking to do is buy the $14 call, short 100 outright shares. Again, we're kind of just waiting for the probability to become a bit more in our favor, or the money, our risk to become less. So we can see here is a credit we're looking at to get filled at $13.25, which this means is we get paid $1,325 today. And then as the strike is $14, your max risk is to $1,400. So basically it means our max risk on that trade, if it fills, is going to be $75. The upside can be quite big. And again, we can quickly throw this into an analyzed trade to show you what I'm looking at. So what this means is, again, if it fills, then anything above $14, we have a max risk. Again, this is into expiration. A lot of the times we won't hold it that long. It will usually be in the money before that. But if it goes against us, if Palantir goes up to $100 or whatever, our max risk is always going to be $75. Now, on the other hand, and again, this is how we trade it, is on the pullbacks. So you can see it around $13.30, it's where we break even. You know, if it pulls back $1, you know, you're going to be up $100. So already got your 1-to-1. And again, I would expect it to pull back a lot more. So that's usually where I'll lock in some shares. And then if it goes against us, again, we can sell the shares we shorted, the other 50% or whatever, how many we're shorted, what we haven't covered. We can get out of those break even. And then again, we're still holding that call. So that call can start printing if it goes to the upside. And that's why I really like trading like this, because we can lock in the shares. The calls aren't going to be worth much by the time we lock in the shares. So what we can do is hold them. If it goes parabolic once more, we can make money on the call side as well. If nothing happens, it doesn't really matter. We only wanted that anyway to define our risk. So again, even if it goes down to say $11, which is something I could definitely see, and again we'll go over that, we're up $2.25. This is just per 100 shares as well, so not massive size. And then again, if it goes down to $10, we'll be up $3.25 just from a $75 risk. Now, how or why do I like the look of this? So again, we're coming into here. What you can see here, fourth deviations at $13.40 to around $13. To me, this is extremely overbought. You rarely ever see stocks trade and just kind of stay above this level. So if I know that, the probability to me is much more than 50% that we fall in price and we continue to go up in, say, a month's time. So knowing that, again, that's why we buy the calls as a hedge, because if it goes against us, we want to be protected. But the odds are, at least from how I trade, make sense that we'll be trading below that in, say, a month's time. So if that's the odds to me, I want to be holding it short bias, and that's why we got that trade plan. And again, what are going to be those targets? So at a minimum, I expect a pullback to 12.30 to around 11.85. So again, if we push down to that kind of low, I'd be locking in profits. Not all of it, but just again, some. So if it goes back up, we can then stop out and the rest of the stuff break even. If we continue lower, I'm then looking at around $11 to $10.50 as supports. Now, this $10.50 is going to be one of the main focuses. This is where I'd probably get out of the majority of the position. And the reason for that is, again, it's just a second deviation. I don't really like holding much lower than that most of the time, because the chance of it continuing down just gets less and less. So $10.50 will probably be my main target on a short like that. So again, that is a massive amount of upside or potential upside if we come to the downside. And again, if it continues to go against us, we still got $75 of risk. So not too bad if it goes against us, but can be pretty decent if it comes our way. So again, those are the key supports. If we went lower, we do have even more supports at $10 and $9.35. So those would be the key supports I'm paying attention to. From a resistance standpoint, again, we don't have really any. Because again, we are at 52-week highs. This, you know, we were downtrending coming into the year. and more recently we've had a big pop. So again, they're downtrending. We don't really have much targets. The only way we can look at targets is if we get a max term time frame and see where these resistances are. So we can see at $14.30, this is our first deviation on a max term time frame. So again, we can be paying attention to that. We would expect to start seeing a pullback. If we did break that, our next target would be 22.30. Again, quite unlikely that we went to a level like this, but that's why we have the calls just in case. And if we went higher, we have $30. Again, very unlikely that we went to this level, but if we did, we got the calls as protection. But if we went to this kind of high, the shares would actually probably become hard to borrow, so we probably wouldn't be able to trade it. But if they're still easy to borrow, then again, we would be looking to get really a new position here, short the shares, buy the calls. And again, then we've got that fine protection if it did continue to go up, but really could not see it staying above, in any reasonable sense, above $30 for any more than a week or so. And again, that's what we kind of see down here. So again, paying attention, that's the trade plan. Those are the key levels to be paying attention to. I hope you enjoyed the video. If you did, why not drop a like and subscribe and check out this analysis video.